Yo guys, in this video we're going to be going over exactly how I passed my $50,000 account with Titan Capital Markets in just one trade. So we're going to be going over the trade breakdown of why I took this trade in every conference that I use, and I'm also going to be going over my personal approach to funded accounts. I hear a lot of questions on what are fundeds, how much should you risk when you do them, all these sort of questions. So I will be going over my personal approach to them. If you don't know much about funded accounts, I recommend watching the bootcamp, as there are many informational videos on there about what is Forex for beginners, all the way down to what conferences I use, how to use them in your trading, and other additional videos like what are funded accounts, how to use them, and the difference between them, live accounts, and demo accounts. The bootcamp is accessible via the Discord, where we also have other things like the Trade Ideas channel, where I make personal callouts, trade breakdowns, and technical analysis videos. If you're interested in the Discord, simply drop me a message on my IG. With that being said, let's get into the video.
So, my approach to fundeds. I didn't actually specifically talk on this in the funded account video, so I'm going to get into it now before we start the breakdown. A lot of people treat funded evaluations like they're trading on their funded account. A lot of them will only risk 0.5% or 1%. I don't believe in this. I believe for funded evaluations, just the challenges, you need to risk more. I risk 2 to 3% on my funded evaluations. If I have a drawdown of 6%, 9%, 10%, whatever it is, it allows me to place higher risk trades and reach my targets quicker. So when trading an actual funded account, you want to risk less, 0.5%, 1%, because you're protecting your capital. You don't want to lose the account, as the account is so big. For example, my $50,000 account, I would not want to lose. However, when it is just the challenge, you are not losing the account. You are simply just losing the challenge fee. So whatever you paid for the challenge, for a 10k with Titan Capital, you pay about £70, sometimes even less if they have offers on. I've paid as little as £40 for a $10,000 evaluation. So simply, you are not losing, you're not risking a $10,000 account, you're just risking £40 or £70 or whatever it was that you paid for the challenge. So bear this in mind the next time you approach a funded evaluation. I tend to pass funded challenges in as little as 1 to 2 trades because of this as well. Slightly higher risk to reward trades with a slightly higher risk allows me to pass them much quicker, instead of spending weeks and months building up capital on this challenge for it to then simply possibly be denied because you traded one time during news. You could spend months doing this challenge, building it up bit by bit, for it to then all go to nothing, and that is months of your time that has been wasted. Whereas if you trade like I do, higher risk to reward ratio trade, you can get it passed in 1 to 2 trades, which you can easily do in under 1 week, and then you find out end of the week if you get granted the account. Also, it's easier to pass it in that sense that you wouldn't get denied, as you would just pick the one trade. As the one trade that you took, you could be sure you didn't violate any rules on. Whereas if you're on an account where you've taken 20, 30, 40 trades, just one slip up across that whole amount of trades could mean that your funded account does not get granted. But nonetheless, let's get into the breakdown. So the trade I took was on GBP USD. I mainly only trade GU and GJ now. I used to trade USD JPY and Euro USD as well, but I figured I was focusing on too many things and I should just dial in and focus on 1 or 2 currencies. I find that these two work the best for me, so I've decided to stick with them and dial in on them, and it is paying off. So before we place any trades, we need to have our bias. Where is price headed for that day? So overall, when we look at GU on the 4-hour time frame, we can see that price is bullish. Price is continuing its bullish trend. So that alone isn't enough to give me a bias, but it is a start. So now I'm thinking, is price going to continue its bullish trend, or is price going to reverse? What can we look out for? I'm going to look for liquidity, as price often takes liquidity and bounces in the opposite direction. So is there any areas where liquidity is lying? Is there any areas where liquidity has been taken and I'm expecting a push to the other side? So when we look here, I could see that price had come up, come down, pushed higher. So we have our break of structure here. Then price has come down and swept this low. So let's dial in and look a bit closer. So let's dial in and look a bit closer at what is going on here. So again, looking at the 4 hour, as we want to look at the bigger picture before we look at the smaller picture. So we see these equal highs here. They have been swept. We had an immediate push to the downside. This push then swept the liquidity from here. Now, what happens once liquidity gets taken? It pushes in the opposite direction, which we can see here. However, we can also see that price has failed to push up past this last swing high. So this tells me that price wants to come down, take the liquidity again before making this move to the upside. So we look closer. Now I've done my analysis on the 4 hour. I've seen the liquidity has been taken here, has failed to close above the high. It's come down and swept this low here. I can now expect a push to the upside. However, I'm going to scale into the lower time frame to look for confirmation. Right, so now we're on the 15-minute time frame, which is the pair to the 4 hour. What can we see is going on? Here is that last 4 hour swing low. This is the liquidity from the last 4 hour swing low. This got taken. This means a huge amount of buys have been taken out. This means that the market has collected a lot of stop losses. It has got enough fuel to then move in the opposite direction. So 15-minute time frame, what can we see? Once we have just swept this 4 hour low from over here, taking the liquidity, see price come down even further, push up, we see it begin to accumulate here, create trend line liquidity, which we spoke about in a previous video in the bootcamp. Price then dumped off, took the liquidity from every swing low that was lying here, then failed to close below here, creating equal lows. So what exactly are equal lows? As simple as it sounds, two lows that are lying at the exact same price point. Now, why are these important? Because it is double the liquidity. You guys know that liquidity lies at every swing low and swing high. So when there are two lows laying at the exact same price point, it is more of a reason for price to come down, sweep them, take the liquidity, and then move off in the opposite direction. So now that I have seen the equal lows get swept on the 15-minute time frame, after this big bearish candle here that swept them, I then scaled in to the 15-minute time frame pair, which is the 1 minute. Right, now on the 1 minute time frame, what can we see is going on? Well, the 15-minute equal lows just got swept. So now I'm looking for price to push higher. So price came down. It then inversed this 1 minute fair value gap. What does this tell us? This tells us price no longer wants to continue its downtrend. because if it did, it would have respected it and pushed even lower. So this is our first sign of reversal. It then came up, created a swing high, came down, failed to push past this low here. So we have just made a higher low. Price then came up and pushed past this last swing high. So what do we call it when price comes down, comes up, creates a lower high, comes down, makes a higher low, then pushes up past this last swing high? We call it a market structure shift. Price no longer wants to push down. Price no longer wants to continue its downtrend. Instead, it wants to reverse and go on a bullish run. So, market structure shift. This is my first confluence that price was going to begin its reversal. Then, as it pushed up past this last swing high, it left a 1 minute demand zone. Price then came down from the last swing high that it made, tapped into the demand zone, and instantly pushed off higher. What do we call it when price comes up, comes down, fails to push past the low, comes up again, breaking the swing high, then comes down again, failing to break past the low again, then pushes up past the previous swing high? This is called a break of structure. Price is continuing its bullish trend. So my entry was just after the break of structure. Now you may ask, isn't that a bit of a vague confluence to enter off of? Well, my answer is no, because this is not the only confluence I had. We had the 4-hour liquidity get taken. Then we had the 15-minute equal lows get taken. Then we had the 1 minute inverse fair value gap, the market structure shift, the demand zone, and the break of structure. Simply, I could have entered once price inversed the fair value gap. However, I wanted more confirmation that it was going to push higher. I could have entered off of the market structure shift, but I wanted to make sure that it wasn't just an inducement. I could have entered simply off of the demand zone. However, I wanted to see that it would be respected. So once all confluences lined up, the 4-hour liquidity taken, the 15-minute liquidity taken, the inverse fair value gap, market structure shift, and when the demand zone was respected, I entered once price had broke structure and pushed to the upside. Simply for my take profit, I targeted session liquidity. So we were in the London session at that time. So I was going to target the Asian session high. My take profit here. Simply, my take profit was $4,500, which is what I needed to pass the 9% profit target. And my stop loss was placed here, which was 2%. I believe that this stop loss gave me enough breathing room as well. It was placed below the demand zone, so if price wanted to retest it and push off, it could do so. This trade was a 4.5 risk to reward. So with my 2% risk, I was then able to meet the 9% profit target and pass my 50k funded in just one trade.
Anyways, that's it for today. If you guys found the video useful or want more content like this, or want to get started trading, DM me on my Instagram and let's get to work.